Hello, this is Arvi from askSlim. In this video, we are going to walk through the multi-time-frame analysis on GOLD. On the left is our monthly, in the middle is our weekly, and on the right is our daily. So let's go ahead and jump over to the monthly. So GOLD has this 7-year saucer bottom that has formed after this large sell-off from 56 all the way down to $6. And we've actually just broken above the top of this saucer around 2250. So this is a very bullish longer term pattern. Our Hull moving average, which is our long-term momentum indicator, is also positive, and we also have positive Fibonacci candlesticks. So this longer term pattern is very constructive overall here. So let's go ahead and jump over to the weekly. So prior to going into what this weekly chart tells us, I just want to go over what do cycles really measure. Cycles are used to really measure the dominant money flow patterns and energies into and out of a stock. And cycles are measured from important low to important low. So given that background, let's go ahead and take a look at this chart. So at the bottom we have our GC future weekly cycles here marked in gold, and we have our GOLD cycles marked in blue. Now, the original dominant cycle was this solid blue line cycle, and as you can see, the cycle lows had formed in a very nice rhythmic fashion, very close to this idealized timing. Now, in the middle of March, we had this large sell-off from 22 all the way down to 13, followed by this sharp rally. And what that told us was that this dominant money flow pattern had actually shifted to this dotted blue line cycle here. And what that tells us is that we are in a really bullish pattern here, and we are looking for this just a minor pullback here, given the fact that we are still very early in this dominant rising phase here. So we're looking for, on the weekly basis, just a minor pullback here. There are upper supports at this 2480 level. We wouldn't look for GOLD in the near term really to get any lower than that. This overall pattern is, again, very bullish. The next intermediate term low is due sometime between early May to early June, so we need to see how this pattern shapes out. It is possible that we already made this intermediate term low here on this large spike, but the odds favor that we would get one more minor pullback here, followed by another move to new highs. There are intermediate term confluence zones at this 2958 to 3093 level on the upside. So let's go ahead and jump over to the daily. On the daily, as you can see by these purple timing spikes, the daily cycle lows have formed very close to the idealized timing over time here. And what we've done is we've drawn two different projections. The green dotted line projection is the projection assuming we already made the important weekly cycle low, and that's why the overall configuration of this next move would be more positive. The dotted blue line cycle is very much in line with our weekly projection and assumes that we would have another test of this prior low around this $26 area into this next short-term timing. Now, the next short-term low is due between the middle to end of June, and what we'd be looking for once that intermediate term low forms would be a very meaningful rally back on the upside, given the overall bullishness of the longer-term patterns. So let's go ahead and zoom out and we can give a summary. Zoom in on these charts so they're a little bit clearer. Okay, so on the monthly, we have formed this large saucer bottom. Our Hull moving average coupled with our Fibonacci candlesticks are all positive, so the longer term monthly picture is extremely positive. The weekly is also very positive. We are looking for a minor pullback here to set up another buying opportunity into this likely 25 area, and on the upside we're looking for a move back to this intermediate term confluence zone up in this 2958 to 3093 level. And on the daily, we are in a very bullish overall pattern, and we are looking for our next short-term low to be due sometime in the middle to end of June, followed by another push back on the upside. We hope you found this information helpful. Please share your feedback with us. Thanks again for your time.